equities at large have seen a bit of a pullback and a vicious pullback in certain markets before this recent bounce from the lows. Can you or are you even attempting to think of whether this bounce could be short-lived, or could it actually extend itself, or will it get sold into? Is it even possible to predict that?
Yeah, I don't think it's possible to predict things on a 3-month view, but on a 6-month and beyond view, I actually do think that things will be higher than they are now. And I mentioned earlier that technology stocks can't outperform because they're too big. They are still very good companies, these gigantic technology companies like Apple and Facebook and Google, et cetera, Microsoft. So they can perform in line with the market. And in doing so, I think we can analyze their recent performance and it could give us a hint of where the broader market is going, because I think they now represent the broader market. So I want to say something that's slightly technical, but I think it's quite important to know. The NASDAQ 100 index is the index that represents the big technology companies. Now, usually we like to look at 200-day moving averages as signs of strength. We like prices to be higher than the 200-day moving average because it infers strong momentum, strong upward momentum. Sometimes, however, you can also use the 200-day moving average as a contrarian indicator. And in this case, what I'm about to tell you, that's how I'm using it. So we can look at the percent of NASDAQ 100 companies that are trading above their 200-day moving average. It's typically over the last 25 years been about 60 to 70%. Now it's down to 10%. In fact, it's slightly lower. 2 weeks ago, it hit 10. I think now it's about only 9% of NASDAQ 100 companies trade above their 200-day moving average, which is to say that the breadth of this decline has been very, very big. Now, the thing I want to tell you is if you measure the performance going forward of the previous instances when that ratio hit 10%, there were 15 of them going back 25 years, 15 times that the NASDAQ 100, only 10% of the members got to, just trading at their 200-day moving average. I can tell you that 12 months later, in every single instance, the index was higher by an average of 52%. Now, in between the beginning, where you hit the 10% and 12 months later, actually in 12 out of the 15 instances, it kept going down first. And then it kind of bottomed somewhere over the next 3 to 6 months. But 6 months forward, only one of the instances was the index still down, actually. So even 6 months forward, the odds of being higher than where we are today is very high based on that. Now, you could say, yeah, but 25 years isn't a long enough period of time to study because we got this big inflation that we didn't have over that period of time. And I would simply say that, every time that you hit 10%, it looked like the end of the world, whether it was the Greeks leaving the Eurozone or September 11 or the global financial crisis, it always looked bad and like there was no light at the end of the tunnel. So 12 months from now, if the market is higher, which I strongly think it will be, there will be a reason. We just don't know what it is right now.